Welcome, everybody, to another episode of the Tech Guys Who Invest, where we teach you to invest wisely and safely. Today is part two of a two-part series that we're doing on how to find deals. And today's episode is how to find deals for an active investor. If you want to listen to how to find deals for a passive investor, check out part one. But today we're going to cover how a active investor in real estate can find deals. So I think we'll start off with explaining what do we mean by deals, which we did for the passive investor part as well. But when we're talking about an active investor looking for deals, we're really talking about an opportunity to invest in real estate for you. And as an active investor, you are going to be the one who finds, manages, and eventually exits this deal. So, Kevin, what do you think?
Well, I think it really depends on. Actually, let's take a step back. As the active investor, I wanted to define that as well. The active investor is the one you're doing the due diligence on a deal. You may be raising capital. You may be talking to the vendors who are important to that deal. Let's say if you're multifamily, the property managers, the brokers. If you're a note investor, the note sellers, the servicers, you are doing all of those things, which distinguishes you from the passive investor who's kind of like, oh, I found an active investor to work with and my money goes to work, right? You are the one in the trenches, if you will, doing all of those activities. As far as deals go, it really depends on, I would say, well, to an extent, it depends on your investor identity. What I mean by that is there are a lot of deals that are done by relationships. Relationships are hugely important. So then going back to that, where do you find these people to build relationships with? Going to events
Excellent.
like conferences. Sorry, go ahead, Adam.
No, sorry. I was just agreeing with you vigorously. I
Yeah,
like what you're saying.
exactly. So from conferences to meetups, even webinars. If you attend a webinar, reach out to that host or reach out to the people who are attending the webinar, because chances are it's being done. The webinar is being hosted via Zoom, right? Those are great ways to do that. LinkedIn, social media. Generally speaking, other investors have opportunities too. One thing I've learned is investors love to buy and sell things. If the price is right, if you will, or if their motivation is right, there's another opportunity that they need to go pursue. Whatever the case may be, connect with investors. Investors will always let you know that they're investors. If you're an active investor, I am 100% certain that you're letting other people know you're an investor too, right? Like that's just the norm that we do. We take pride in it, but it's also a way for us to raise capital. We need to let people know that what we're doing is different than this person. All right, it's how we stand out. So that being said, you can find investors easily by searching them on social media, searching them on Google. So just look out for that.
Yeah, absolutely, Kevin. I love what you're saying there. And if you don't know this already and you're an active investor, you should be telling every person you meet what you do in terms of your investing, right? I remember listening to a podcast early on when I was first starting to get into real estate investing. And he said, I would go up and sit on a bus bench and start talking to someone waiting for the bus and tell them I invest in real estate. It was a guest on some podcast I was listening to, and I just thought that was interesting. That sort of stuck with me. And his whole point was, if someone sits still long enough, let them know what you do. Well, that can absolutely lead to deals. I know I have been involved in deals before because of a random conversation that came up where I did share what I'm doing with them, and it led to something. So that's huge. One that stands out to me, especially on the commercial or multifamily investing side, is establishing relationships with brokers and agents. And it's funny because when I was focused more on single family investing, I was told by some people to avoid real estate agents because they don't know how to work with investors. But I've since discovered that that's not exactly the best advice. The key there is to just work with an agent that understands investors. You want to work with an agent who is themselves an investor. If they occasionally will pick up a property they find, but they're a real estate agent for their job, that's a good one to work with. And so you want to talk to them and make sure that they really understand and they actually invest themselves. And that'll make all the difference in the world. But if you're on the commercial side, like if you're investing in large multifamily apartment buildings and things like that, or if you're investing in um, shopping centers or office space, or if you're investing in something like that, uh, really the primary way to get deals is through brokers. Now, what's interesting and a little bit difficult about that when you're first getting started is you have to get those relationships built and you have to get them started, and they don't want to talk to a unproven new investor because their time is precious and they really need someone who's going to be able to get the deal all the way to close. But as you get through more and more deals, as your experience builds and people start to know who you are, that becomes less of an issue. Establishing relationships with brokers is critical for that kind of investing.
Nice. And that makes sense from the commercial side. So, from a note perspective, there are four ways that you can get notes. The first is going to be through exchanges and marketplaces that you see online. Paperstac is one example. We don't have an affiliation or an incentive with them, but that's just one. You could look them up and see that there's a marketplace for notes that's relatively new from what I've been told. Another place is institutional notes. So if you're buying from a bank, a local credit union, chances are you're not going to be able to buy from a Wells Fargo because they'll probably tell you to pound sand. They do deals in the billions, right? That's just not what they do. But you can pick an area that you like as far as a geography and build a relationship with the local credit union. They may have a note or notes that are like, hey, there's nothing we can do with this, or it's not performing. We want to get rid of it. That could be your opportunity to solve their problem and then get added to that investor list. The third way is through other investors. As I mentioned, investors are always buying and selling things. It's just, I don't know, it's like a law of physics, if you will. It just always happens. And then notes can also be found through public record. So seller financing are viable options for note investors, whether they're performing or non-performing. And you can find that information through public records. And when you have those addresses, you can send them direct mail, or you can skip trace and get their phone number. All of those are viable things. The direct mail route, that's what I'm doing right now in Chattanooga, Tennessee. I'm sending direct mails out to people who have seller finance notes. I'm trying to get in touch with the lender and buy those notes off of them. So those are four ways that you can find notes. And when it comes to off market, for example, you want to be top of mind, like Adam was saying. You want to be that person that you have the relationship with to say, oh, I know exactly what Kevin's looking for. This will actually be perfect for him. Let me reach out to him first. Right. That comes with building those relationships. Yeah, it's going to take time to find these deals. And I imagine for other asset classes, the same thing is going to hold true. Building those relationships with the right key people. So, as an active investor, you're going to have to find out who are these key players, who are the people that you need in your circle to get these deals. And then once you figure out who they are, building the relationship, find a way to add value. That is the simplest way to get on top, to be top of mind of somebody. Is what ways can you add value? It may be sending them a quick article. It may be, things die down, taking them to coffee, or whatever the case may be. Yeah, do you add value to them? They will remember you. So I would really focus on building those relationships because they are going to come in handy.
So you mentioned direct mail. There are different types of direct mail, yellow letters, postcards, other types, I'm sure. Uh, there's been direct mail with real estate investing for as long as I can remember, although, I may not have been in this as long as some veterans. The books of theirs I've read all mention things like that. So I think direct mail has been around for a long time. And even with technology where it is, it's still effective. It's still happening. So that's a really good one. Online postings, I feel like, are kind of a more modern version of that.
Right.
So you wouldn't want to use one instead of the other. You would want to stack one on top of the other. So in addition to the direct mail, start posting in the Craigslist group or other types of online websites like that for your area. Also, joining a Facebook group for investors in your area might be a good way to find deals. And then we talked about this in the part one, but getting on lists can also be a way to find good deals. However, when you're actively investing, When you get on lists for active investments, it's a little different animal there. So a lot of times you may be getting on some type of a wholesaler's list, especially if you're looking at the single family and plexes and things like that. It's really important to understand that they're a reputable player. There's so many people out there who are not, or they're just trying to get into the game and they're new and they've had some bad advice from a questionable character who's already in it. And there's just a lot of that going on, what we call daisy chainers, or people who are kind of trying to sell other people's deals in a way. Try to weed that out as best you can. And one way to do that, is to talk to them and begin to establish a bit of a relationship with the person whose list you're going to be on, and make sure you're not just getting spam, because that can waste your time very quickly. You don't want those crappy deals. I don't know a better way to say that one.
Ask the person straight up that's selling it. Are you wholesaling it, or do you own this? Are you brokering this deal? Those are fair questions to ask. If they dodge the question, it might give you the answer, right? But there's nothing wrong with asking that. And that's not to say that wholesalers are bad. If the numbers work for you, then why not do the deal, right? That's what it boils down to: is, do the numbers make sense if you're buying it through this person? If it does, then why not? It's very possible. You may have to be a better, you may have to negotiate harder, but it's still a viable option.
Absolutely. I want to talk quickly about some ways that apply specifically to commercial. Some of these slightly overlap with what Kevin was saying about notes, but building relationships is also critical here. I mean, that's critical everywhere, I think. But building relationships with those who are actually in the industry is a way to do it. So, property managers, lenders, SEC attorneys, those are all good examples. Building relationships with other operators, and then we already mentioned brokers. So that's another good way. And if you
Um,
guys,
no, sorry. So we're gonna have to cut out some of that because it was like breaking up. But can you just go over what that last thing that you said?
oh, shoot. Yeah. All right. Here goes. And some ways that apply specifically to commercial are going to be, as Kevin said, uh, build relationships with those in the industry. So, property managers, lenders, SEC attorneys, those are all good examples of people you could build relationships with and potentially find a good large multifamily deal. Build relationships with other operators. So, if you're syndicating mobile home parks, get to know other people in that field, and it can lead to deals one way or the other. Something that doesn't work for one group may work for another, and there are lots of reasons why that could be the case. And then brokers, again, we mentioned that already, but building relationships with brokers who sell the types of properties that you're interested in, those are all good ways to invest.
Love it. Got nothing more to add. Oh, one thing to final thing to say is, if you have an investor that's got a good deal flow, and you ask them, hey, where do you find your deals? Don't be offended that they won't tell you, because if they give you their source, it basically adds competition to what they're getting access to. So just throwing that out there, that's a pretty normal thing. And you look at it from their position, right? Those deals are going to be their livelihood. So they're risking their livelihood of not being able to, introducing you to this new pipeline, if you will, that may not bode well for them. So just take that, don't get offended if somebody's not really transparent about where they're getting their deals. They're keeping it close to the vest. But we gave you some great tips as to where to find it. It may take some time, so be patient with it, but be consistent. Be consistent with how you build these relationships, how you're reaching out, to get on top of mind. If you reach out once every 9 months, that person's going to forget about you. That's just kind of how we are as humans. So do what you can to be top of mind and build those relationships and add value. If you want to share with us how you find your deals as an active investor, we'd love to hear about it. Maybe we could do a podcast episode about it as well. So shoot us an email, techguyswhoinvest@gmail.com. Thanks, everybody.